Good afternoon. I want to thank everybody for logging in and calling into our webinar today on private placements and having your IRA invest into kind of a different alternative. We see a lot of individuals invest in real estate, mortgage loans, and a lot of our webinars are geared towards that. But the webinar today and the next webinar that we're having next Tuesday, which will be on crowdfunding with IRAs, hopefully trying to bring a little bit more information, but different information to all of you who enjoy these little educational webinars. My name is Scott Maurer. I'm the Director of Business Development for Advanta IRA. I've spent most of my time at Advanta helping people through different investments, and a lot of my time more recently teaching a lot of the educational webinars and seminars like the one that you're enjoying today. Advanta IRA, we've been around since 2004. We have a dedicated concierge customer service for all of our clients. Anyone who is looking to invest a self-directed IRA with us gets assigned to a specific account manager, someone who will help them with anything regarding their account, whether it's their initial transaction, their transfers, et cetera. We really think that sets us apart in our industry, and especially for what we look to do and help to achieve with our clients. A quick disclaimer, a couple things we don't do at Advanta IRA is we do not give any legal, tax, or investment advice. So if you need an advisor, you need a referral, we can certainly give you the information for someone who can give you advice from a tax perspective, from a legal perspective, and also from investment. That's very important as we talk about private placements. A lot of these investments are into hedge funds, they're into REITs, things we'll talk about in just a few moments. It's important to make sure you understand and do your own due diligence on those particular investments and that you're comfortable with those investments as well. And we can't give those to you. We provide information and education through our webinars and seminars, but ultimately deciding if an investment that fits for you is up to you and your advisors. Like I said, we can always refer you to individuals to help you out in that scenario. Now at Advanta, we only deal with qualified money, whether it's a traditional or a Roth IRA account. Those are individual retirement accounts, or whether you work for a small business or you own your own business, you can have access to a SEP or a simple IRA, or even possibly an individual 401k account. Any former employer's plan, like a 401k, a 403b, et cetera, can also be self-directed. You simply have to roll those monies into a self-directed IRA account to then in turn make the different investments. So the key thing for anyone listening on the webinar and trying to figure out, if this money I have at this institution would qualify for a self-directed IRA, if it is an IRA account, it certainly can be used. And if it's an old employer's account, someone you're no longer working for, you can definitely move those funds as well. Now, we do get questions a lot of times about current 401ks. So I work for a company now, I'm still employed there, and the rules there are somewhat all over the board because each employer, if you're still employed there, can decide whether or not they want to allow you to move that money out to an IRA account. So current employer plans, a little trickier, but any former employer plan can certainly be rolled over to a self-directed IRA account. So again, today's webinar is talking about private placement investments. Again, a lot of the webinars, a lot of the trainings and seminars that we do are centered around real estate, whether it's the webinars, the live lunch and learns. We do continuing ed for realtors. We focus much more on individuals buying rental properties, buying rehab projects, maybe your IRA acting as a bank and being a private lender. We see a lot of other individuals that when they're looking to make investments with self-directed IRAs are looking more into private placements. And these could be REITs, real estate investment trusts, which you're kind of investing in real estate, but more so buying stock, so to speak, in a larger company that is going to go out and buy maybe hundreds or thousands of different rental properties, all as part of that one real estate investment trust. People invest in hedge funds, partnerships, limited liability companies, or you'll hear the term LLCs a lot. That's what we're referring to there. Private stock, venture capital. The list really goes on, and I'll tell you a little bit about private placement in just a moment. But I want to remind anyone who's listening live, if you have a question during the webinar, please type it into the chat box on your screen. Make sure that I get to your question by the end of the webinar today. If you're listening to the recorded version of this webinar, please write down my information. It'll be on the last slide of the presentation today. Give me a call, send me an email, and I'll walk you through that. So again, anyone listening live, please type questions as we go along. So there are a lot of different private placement structures, but the key thing that a lot of them basically have is that these are assets, these are investments that are not available to the general public. Okay, so private placement a lot of time is stock or ownership interest, for lack of a better term. There's offered from a company to potentially a relatively small number of investors. Now, if anyone was looking to invest in Coca-Cola or IBM, just about anybody in this country can set up an account with a brokerage firm and buy that stock. Anybody could be a shareholder. With private placements, a lot of times those assets might be limited to high net worth individuals, accredited investors, maybe friends and family of the people that are starting this private placement, or if you're able to find out about it. It's not something that's publicly offered. So it's kind of a tongue-in-cheek when a private placement is something that's not public, but that really is kind of the best way to describe it. It's very similar to buying stock, buying interest in something you're more familiar with, like a Coca-Cola, or you see Disney on this slide as well, but it's just not available to everyone. And typically in buying these types of assets, the other key thing that they have in common is that brokerage firms like a Morgan Stanley, a Merrill Lynch, a Charles Schwab will not let you hold this type of asset within their particular accounts. They are not interested in holding private placement inside their platform. They want to sell you mutual funds, stocks, other things that they sell that's publicly traded. When you bring them an alternative investment, they really don't want to handle it. They think there's too much liability there for something that they're unfamiliar with. But at Advanta, we're very comfortable holding these types of assets. And like I said, we've held quite a different number of these assets for a lot of our clients. Now, it's important to remember, if you're looking to invest in a private placement, to understand what some of the paperwork involved looks like. So there's private placement memorandums. These sometimes, I've seen them as short, actually, as 50 pages and as long as 200. But a private placement memorandum is essentially a comprehensive overview of the company, the business plan, the leaders, who the principals are that are involved, and what their projections are. So in a private placement memorandum, you're probably getting basically a lot of the projections. Here's what you can buy an interest in our company for this. Here's what we're intending to do with the investment funds, and ultimately here's what we hope that money will grow to. So it really is a good comprehensive overview, typically, for the investments that you're looking at making. Now, an operating agreement is the document that will state how new members will be admitted, how you might be able to sell your shares, how the company will be run, etc. So a lot of LLCs and partnerships have agreements, operating or a partnership agreement, that basically says, here's all who is involved in the company, here's how we will allow new people to come in, here's how the day-to-day business will be run. So an operating agreement, a little bit separate from the private placement. And the private placement is more just an overview, saying if you want to invest with us, here's what we're looking at doing. An operating agreement says, here's the rules at which, if you do invest with us, you're going to be bound by as a member in that particular company. Lastly, the other document we see a lot with private placements is a subscription agreement. And this is a sense, almost like an application process, where you ask to become an investor by filling out a document to subscribe for a certain number of shares or units, or however the company is structured, at a set price. And you're also then usually, in signing the subscription agreement, agreeing to be bound by the terms that are laid out in the operating agreement or the bylaws for the particular company. So if your private placement memorandums, which are really, again, just the comprehensive overview of the company, the operating agreement that states how that entity is going to be run, and the subscription agreement, which is the documents that get filled out to allow an investor, in this case we're going to approach this from talking about an IRA, how an IRA as an investor can invest in the particular entity. So I'm going to go through a couple of case studies that flesh out some more of these terms and hopefully shed a little bit more light on this particular topic. So our first case study is a startup company. So we have Alexandra has a friend starting up a brewery, and I'm sure a lot of people on the call are familiar with, kind of micro brews throughout certainly here in the Tampa Bay area, but I'm sure throughout the nation as well. Really a big and burgeoning company, or a burgeoning industry for people want to get into. And a lot of times those breweries are started with private financing. Either the owners own private money, or they go to a bank to get the financing, or individuals are looking and soliciting for other individuals that will join in and become a shareholder in that particular new entity. So Alexandra has money in an old employer's plan, is able to roll it over into an IRA. She's not happy with the investment option that she has, the current custodian. She talks and contacts us about finding out more about how her IRA could invest in this particular brewery. Now, on the other side of the equation, there's Bob. Bob is one who's Alexandra's friend who is starting up the brewery. So he's obviously going through the initial phases of acquiring a location, acquiring the equipment, etc., and is going to need capital to do that. And again, not all he could certainly go to a bank potentially for a loan. Some banks may not lend to new companies. He also may decide he doesn't want to deal with the bank, so he's going to have to raise some private capital on his own and give up some of the ownership to his investors. So Alexandra reviews his plan, and she probably does some due diligence not only again on Bob and his business plan, but also similar businesses in the area. The investment paperwork, the prospectuses that he gives her, she's going to review them, and ultimately she offers to invest $100,000 into this particular brewery. So again, it's important when she's evaluating this investment that she do so with advisors, other individuals. Advance's job in the process is not to evaluate whether Bob's brewery is going to be successful and ultimately Alexandra is going to reap a windfall from the investment. Our job is to make sure that the documents in the investment get properly titled. So the steps in the process, Alexandra is going to need to open up and roll over her plan into an Advanta IRA account. We will assist her in that process with that paperwork. She needs to evaluate the investment documents. So again, looking over Bob's prospectuses, if he has a private placement memorandum, we're looking over that document. Meanwhile, at Advanta, we will be helping her get the account open, getting the funds moved over, and ultimately when she has those investment documents prepared, we will sign those documents on behalf of the IRA. It's very important that when the subscription agreement, whatever document Bob has, it's going to reflect Alexandra's IRA as the owner, that document specifically state that Advanta IRA, for benefit of Alexandra's account, is listed as the owner in that particular investment. And Alexandra will need to read and approve those documents for us before we can sign. So make sure that we have her approval on the documents. We will sign and wire the funds to complete the investment. Now, as she holds that investment in her account, if there are any stock dividends from the brewery, they would flow back into the IRA account. And at Advanta, we would accept those in and deposit those into the account. So just an example what the subscription agreement might look like, you can see that highlighted there in yellow is the wording for her IRA account. So the purchaser in this subscription is Advanta IRA for benefit of Alexandra Jones and her account number. And usually the subscription agreement, again, is going to outline what exactly she's buying. In this particular case, for $100,000, she is buying 1 unit of the Brewing Success LLC. So this document is what Alexandra would need to sign off on as approved and indicate for us that she is accepting of that particular investment. The subscription agreement then also usually has a signature page, and again, Advanta IRA, as the administrator for her account, is going to be the company signing, or the entity signing on behalf of her IRA. We will have a spot for Alexandra to read and approve it, and obviously someone will need to sign on behalf of the LLC as well. Now going forward, the principal investment was $100,000. She's getting a monthly dividends, or maybe a share of the income from the LLC, of $750 a month. Annualized, that's 9% return. And again, that income that is coming back in from that investment is not income to Alexandra, because that money is going back into her IRA account. So it's not taxable to her, and the earnings that she could receive inside the IRA are unlimited. Now, IRS rules limit you each year in how much money you can put out of your own pocket into an IRA account. You're limited to your annual contribution limits, but you're not limited to how much an account can particularly earn. And this is especially true when we start talking about, or if you look into a lot of private placements, we've seen some where people have had substantial gains. You might have you invest in a startup company that really is kind of new and innovative, and it takes off, and you double and triple your money within your IRA. It's important to realize that those earnings, not only are they unlimited, but they're also not going to be taxed because it's coming back into your IRA account. Another investment that we've seen quite a bit of in the realm of private placements is actually tied to real estate a little bit. We talked at the very beginning that we do a lot of our seminars and webinars on buying rental properties and buying rehab projects, doing private mortgages. Private placements can also be structured, and you can still invest in real estate through using a private placement. And the one entity that we see done quite a bit are real estate investment firms. So Joe has money in a Roth IRA. He wanted to invest in an apartment complex. Okay, now those of you who've taken our other classes understand, usually when if an IRA was buying a real estate itself, in most cases, 99% of the time, the IRA is paying cash for a particular property. Not a lot of people have enough money in their IRA to simply buy an entire apartment complex. So in this case, the apartment complex developer is looking for, again, a number of different investors to help fund the particular purchase of that particular apartment complex. So Joe isn't interested really in investing in single-family rental home, a condo, et cetera. He'd rather invest in a project a little bit larger in scale and that maybe somebody else is taking on. Somebody else is actually going to be doing all the administration, all of the work on that particular investment. So currently, obviously, his Roth is limited to publicly traded securities because of the brokerage firm that he's holding that account with. And again, they're not going to hold the private investments for his IRA account. Again, that's usually just a function of brokerage firms not willing to hold those types of assets. So he moves a portion of the Roth to Advanta to make the investment, and he then again obtains a private placement memorandum for this particular LLC that is set up. Again, very similar to what we saw with Alexandra. Again, Joe needs to open up and transfer a portion of his Roth to an Advanta account. He does not have to move the whole thing. In this example, he needs $50,000 for the investment. He only needs to transfer $50,000 from his current custodian over into the Advanta account. Again, we're going to assist him in getting that paperwork established, getting the transfer form sent to get those monies moved over. Again, most importantly, I can't say it enough times, it's important that Joe evaluate the investment itself. So he's going to need to review the investment paperwork, the private placement memorandums. If he's investing into this apartment complex, probably wants to do some due diligence on, what other apartment complexes are in that same area. What do those units rent for? What are the projections that this particular company has for making that investment? What's his projected return? All those, again, decisions and research are on Joe to make sure he looks into and is comfortable with the investment. Ultimately, we will sign the investment documents again on behalf of the IRA after Joe has approved them. And ultimately, we wire the funds to complete the investment. So it's similar to the private stock of a brewery. Obviously, this is just a different type of investment. Somebody investing in real estate through kind of a larger firm. And again, we see these investments a lot at Advanta, whether it's high net worth individuals, whether it's accredited investors, people who know the individuals getting the investment started. That can all be done. Obviously, these investments can be done within a self-directed IRA if you have the right vehicle to do it. So again, it's an important thing to document for the IRS is that this investment, for the purchaser in this particular entity, is Joe's Roth IRA account. So we make sure at Advanta that the language is correctly worded in the subscription agreement as the purchaser. And again, also looking to make sure that the purchase and sale terms match what Joe has told us as well. It said, I'm investing $50,000. We need to make sure that the subscription agreement states that it's $50,000 as well. And again, we will sign on behalf of Joe's Roth IRA account after Joe has has reviewed and approved the documents. Now, it's important to remember I mentioned the term accredited investor from time to time. For those people who are looking into getting involved in a private placement, or if you find one and say, I'd like to make that investment, accredited investors, a lot of times the status, it's based on your net worth, could be based on your annual income, and it's typically the individual will meet the status of whether or not you're an accredited investor, and then in turn have your IRA account make the investment. Your IRA is not the accredited investor typically. It is you as the individual. So if you're exploring a private placement, it's important to look over those requirements for accredited investor, make sure that you're meeting that threshold, or at least talking to the individuals running the private placement to understand and make sure they understand that you're on board and you qualify. So in this particular investment, the principal involved was $50,000 with monthly dividends coming back in of $500 a month for a 12% annualized return. When the investment sells in 5 years for $75,000, he ends up over a 5-year period of time returning $105,000 into his IRA based on the initial $50,000 investment. Again, now this is not something that happens with every investment. I've actually seen something very similar happen, even to a greater extent with some clients. But all investments are going to be different. It's going to depend on who you're investing with, the people that you trust to make those investments, and what you're looking at doing, etc. Today's webinar was a shorter webinar, so that kind of concludes the prepared portion of today's webinar. Along with the presentation, we're going to send out the recording and a copy of the slides to everybody who is involved today, who participated live or on the recording. There will also be a link. We're going to have it's a good time to have a follow-up webinar on this. Today we talked about private placements, and a lot of times that is dealing with accredited investors and can be higher net worth individuals. But in the last few years, crowdfunding has become much more popular, become much more a buzzword, so to speak, of where individuals can invest in these types of entities with a lower threshold, a lower dollar amount to actually get their foot in the door. And so next Tuesday, we're having a webinar on investing through crowdfunding. We're bringing in a guest speaker to talk to us and talk to everyone who listens a little bit about crowdfunding and how that generally works. So I'd encourage you to sign up for that webinar. We do have a question that came up on the chat, so if anyone else has any additional questions as we go, please get those typed in. Someone said they understand that we can't give investment advice, but how can I access a network of some sort to see investment opportunities like mortgage notes, etc.? I would think some of the best networking for those types of, for actual real estate, single-family homes, mortgage notes, etc., are local networking events. We list some of them on our website that we attend, whether it's in our Atlanta or Tampa office, events that we get out to. That are local real estate groups where you can meet people and find out, kind of put it out there. If you have money to lend, you're looking to buy, and network with those individuals. When it comes to private placements, those are usually things you could probably look to a financial advisor. If you have a separate financial advisor, look to them to protect. They might know of other opportunities. You can certainly, again, probably search the internet to some extent as well. There have been a lot of, in the realm of private placements, a lot of the PDQ restaurants, people familiar with PDQ, or there's been other private insurance companies that have established. We've had clients establish accounts with us to invest in those particular entities as well. So it's kind of on how to find the opportunities. Might be a little bit tricky, but if you do, we can certainly help you with those particular private placements. So we have the same kind of question, but maybe in reverse. Where are we finding most of our clients? We get a lot of our clients from referrals, so whether it's our own clients, CPAs, attorneys. We have worked with a lot of private placements who we've gotten in contact with and been able to help them. If they have investors, actually they send their investor to us, so the investor can use their IRA to make that investment as well. We've been, I think, those companies have been successful and been very happy with our services in allowing for them to get their clients to use their IRAs to make the investment. In fact, there was an insurance company that we had, I think, probably 50 or so individuals using their IRA to make that investment and buy stock in that private insurance company. That insurance company was able to raise substantially more funds by allowing for IRA investments. So for finding our clients, again, we network at a lot of local real estate events. We get a lot of referrals from clients, CPAs, attorneys, and again, also we're working with some of the private placements as well. Thank you all thank everybody for attending today's webinar, participating. If anyone has any questions, make sure you get them in here at the end. Otherwise, go to our website at advantaira.com to see all of our other upcoming events and seminars that we have. Again, next Tuesday, we have one on crowdfunding that'll talk a little bit more specifically about that type of private placement and how individuals with a lower threshold, or maybe who aren't accredited investors, can still have access to these same types of investments. So if you have any other questions, please reach out to me. My email address is here on this slide, as well as my phone number. I'd be more than happy to talk with you, and I thank you for attending.